Hi, friends. Welcome to the webinar for Pioneer Crossroads. We're going to get started here in just a second. Want to go around the room and let everybody that's on here, though, introduce themselves. So, if you would drop in the chat where you're dialing in from. I'd love to see your name, see who all's here, and where you're calling from. So, go ahead and do that. We'll give a minute for everybody to introduce themselves, and then we'll dive right in here. It's fun to hear where everybody's from. There's some friends from Idaho. Welcome, everybody. This deal we're going to talk about is right in your backyard, Mountain Home, Idaho, right outside of Boise. There's one from Twin Falls, my hometown, right where I live. Welcome, welcome. Texas, yes, I love my Texas friends. Thanks for coming. I know it's a little later for you guys. It's 7 o'clock there, so I really appreciate you taking the time. Oh, there's a Californian. Hi, friends from California. Debbie, nice to see you. Thanks for saying hi. Thanks for coming in. Oh, there's a couple East Coasters popping in. Atlanta, Miami. Oh, you guys are really dedicated. Thank you. It's definitely late there. I appreciate you being on here. Okay, friends, we're going to dive in here. We're going to talk about Pioneer Crossroads. It's a 13-unit strip center that we're buying in Mountain Home, Idaho. If you would, as we're going through this, if you have any questions that pop up, please put them in the Q&A section of the Zoom here, and I will make sure I get all your questions answered. I'll try to get to them throughout the webinar if it's a good fit. Otherwise, we'll get them at the end. So yeah, questions go in the Q&A, and hopefully other people will keep introducing themselves as they pop on here. But we got a lot of people, so let's dive in. All right, so you guys probably all know who I am. I'm Senate Eskridge. I do these kind of deals all across southern Idaho, where we're buying our own deals that I run with my partner Chris Carney, who's going to join us a little bit later. He's actually at the property, this property we're talking about right now, with a contractor. So he's going to join us a little bit later as we go. I also do fund of fund style investments across the country, which what that means is I work with big operators that have fairly large minimums, and then I break that minimum down and I bring that to you so that you can invest in them, provide you access to deals you wouldn't normally have access to, provide you due diligence services. I do a lot of work to make sure these deals are as risk averse as possible, right? As low risk, as higher return as we can get in there. And then also diversification, right? So this one that we're going to talk about today is a strip mall, but I also do multifamily, I do debt funds, I do oil and gas investments, multiple different deals that we bring out to all of you. But I know you're all here to learn about Pioneer Crossroads. So this is a good picture of it right here on this slide. You can see right now it's currently named Stardust Plaza. And, it's been Stardust Plaza for a very long time. And, one of the challenges with this property is it needs a facelift. As you can see, these paint scheme and everything's a little bit old. And, we're actually buying it out of probate. And so there hasn't been a lot of investment into it for the last year or so. And so we're going to get this great opportunity to come in and give this property a nice facelift and rebrand it as Pioneer Crossroads, which is what we're going to call this. So let's dive in. First thing, a little table of contents, things we're going to talk about. I'm not going to read you the contents, but these are the different things we're going to cover. Really, I just want to tell all of my friends here about this amazing investment opportunity that we have. I saw our first question come in, but we're going to save that one to the end because I'm going to cover that on the second to last slide, I think. So if anybody else has more questions, please drop them in the Q&A window. Before we get really started, I got a couple disclaimers I got to give you. I am not a CPA, lawyer, or financial advisor. This is not an offering to invest in a security. For that, you have to read the full PPM, which you'll have access to towards the end. And this is not financial or legal advice. Please talk to your attorneys or CPAs or financial advisors before investing. All right, friends. So the key details about this investment. So we're buying this property for $2 million. And the first thing I really want to talk to you guys about is the appraised value. So we have two different appraisals on this property. The first one came in at $2.7 million. The second one came in at $2.8 million. So either one that you believe, right, we're instantly getting $700,000 to $800,000 worth of equity day one when we buy this property. It's a phenomenal bonus right at the very beginning. So you can see here the timeline is it's a 5-year hold, and during that 5 years, we're projecting an equity multiple of 2.29 times, which if you do the math on that, comes out to be a little over 20% internal rate of return. Which I think I've talked to just about everybody on this call about what internal rate of return means. But in short, it's a time-based return. So the sooner you get your money in the beginning, the higher the returns, and the longer it takes throughout the hold period, that IRR goes down because it gives better weighting to front-loaded money. We have a total of 885,000 that we need to raise for this deal total. And you guys, almost 500,000 of it is already committed. So there's a lot of people that have already been really interested in this deal, and there's not a lot of room left. And I don't say that I'm not a false sense of urgency guy. I will tell you the truth and nothing but the truth. But with only $400,000 left on this deal, I do expect it to fill up fairly quickly. So it is going to come first serve, friends. And the GP, so myself and my partner Chris, we're putting in $100,000 of that equity. So if you do the math on that, that's a pretty high percentage that we're putting in versus the common equity that is just on there. So again, just to recap, 5-year hold, 20% IRR, 2.29 times your money over that 5 years. And we're buying it for $2 million, and we have a 2.7 and a $2.8 million appraisal. Why Mountain Home? So you guys, those of you that are from Idaho, I probably don't need to tell you why Mountain Home is such an amazing place. But if you're not from Idaho, you're probably thinking, why would I want to invest in a small town like Mountain Home? Well, first of all, it's not that small. It's actually fairly large. But it's really what it is it's a bedroom community of Boise, Idaho. Okay. So this property is about 25 miles from Boise. And the town of Mountain Home has so much going for it. First of all, it's been growing fairly consistently, throughout the last several years. We haven't really seen a dip in population. Also, the economy is supported by the Air Force Base in Mountain Home. And the Air Force Base is expanding. They're bringing in 500 fighter jet teams from Qatar or Qatar, however you want to pronounce it. And so for the next several years, there's going to be an influx of 500 airplane crews right at the Boise Air Force Base. They're basically building a second Air Force Base for this expansion. It's a huge growth. Also, Micron Technologies is a big chip producer that's right in Boise, and it's on I got to do the math, east side of Boise. So it's closer to this property than it is to where people live in Boise. So all these people are going to live in Mountain Home, most likely, and commute into Boise, which means that there's going to be tons of opportunity to fill these spaces with ancillary businesses that take care of that growth. On top of that, there's a casino that's coming in on the Indian reservation that's right outside of Mountain Home. So there's just tons of things that are happening in Mountain Home. It's growing very quickly. And part of the reason is this top bullet on this slide is it's right between Boise and Twin Falls, right on the main thoroughfare. Like anybody that's commuting to or from Boise has to go right past this property. So Mountain Home is a fantastic place to invest. I'm very excited to have this project going on there. So let's talk a little bit more about the property specifically. So it's currently a 13-unit strip center. So you can see some pictures here. Each one of these signs and spaces is its own unit. There's one that's as high as 7,200 square feet, and then some as low as like 1,000 square feet. And that's done by design so that we can have different types of tenants in there. It's on one of the busiest roads in Mountain Home, and it's got a great mix, as I mentioned, of different sizes, but already it has a mix of retail, restaurant, services. There's a UPS store on one end, and this Taste of Texas you can see in this bottom picture on the bottom left. Both of those businesses have been there a very, very long time, and they intend on staying and renewing the lease. On top of that, it's right next door to the not the only grocery store in town, but it's right next to an Albertsons grocery store. There is a Walmart clear on the other side of town, but it's not an anchor tenant in this property, but it's as close to an anchor tenant as you can get. People are going to go to the Albertsons and then come right across the street for all these other things. There's a huge parking lot, needs a little bit of attention, but more than enough spaces. I think it's like something like, what was it? 17 spaces per unit or something like that. I have to double check that, but there's lots and lots of parking, which makes it a great location. All right, so why this opportunity and why now? This is something that's really important to pay attention to. So first one is it's really been undermanaged. I told you, uh, well, let me tell you the story, right? Why is it undermanaged? So we bought this property. Let me go back to the previous slide. We bought this property actually out of probate. It's a sad, sad story, but the owners passed away and it had to go through the probate process. And it took a very long time to get it through. There's some contention with the heirs and things of that nature. And so when a property like this is in probate, you really can't do anything with it. You can't renew leases. You can't do new leases for sure. You can't evict people. You can't even do any major repairs. And so this property really just kind of got a little bit ran down for the last year. And because of that, nobody really wanted to rent it, right? And so now we're going to go in and clean it up. And we've already filled another half of the spaces again. So you can see at the bottom it's 50% leased. Well, we have 4 leases under negotiation right now that our property manager is already working on pre-leasing it before we even own it, right? So it'll be 75 or 80% full by the time we close on it later this month. All right. The next thing we're going to do is shift everybody from regular leases to what's called a triple net lease, which what that means is that they have to pay all the expenses for the property related to their space. So literally, if the roof leaks, they're going to fix it. If the air conditioning breaks, they're going to fix it. They even get some of the common area stuff passed back to them, like snow removal, parking lot maintenance, those type of things. Triple net is absolutely the best way to go when you're doing something like this. Also, we're going to rebrand it, as I mentioned. We're going to paint the property and change it from Stardust Plaza to Pioneer Crossroads. It's a better name, and we'll get better Google reviews and things of that nature. So rebranding is always good. And then this bullet point that talks about below market rents, I want to talk a little bit about this for a minute. So when we first looked at this, we were looking at rents that were about 50 cents a square foot, which is really, really low for a property like this in Idaho. And we were very confident that we could get 65 cents a square foot, maybe 70 cents. So we did all of our underwriting, and the returns are projected based on 65 cents a square foot. Well, I told you we have 4 leases we're working on right now. Two of them are at 85 cents a square foot, and 2 of them are at $1 a square foot. So our underwriting was way lower even than what we're getting today. So there's a lot of room for rents on the upside. And then also the leases, as I mentioned, it's at 50% occupancy right now. Our underwriting shows a 90% occupancy after year 2. And we believe we'll be able to be 100% occupied by midsummer next year. So very conservative on the underwriting and lots of potential for upside. All right, so we talked a lot about this already, the strategy. We're going to rebrand this property. We're going to make the parking lot look pretty, clean it up, paint it, that kind of thing. We're going to install a digital reader board sign. You guys saw in the very first slide, there was a static sign that honestly is not that pretty. And so we're going to rip that thing out and we're going to put a new one in. And we're going to be able to do now advertising for the tenants that are in this property. And this is not written in the underwriting at all. So any profit we get from this is 100% bonus, but we'll be able to sell advertising space on that digital reader board as well. I don't know how much we're going to get. That's why it's not included in the underwriting, but a couple $100 a month is a nice bonus. We're also going to install a 14th unit, right? So we're going to put this food truck park space that's listed on this slide in the property out towards the sign, and it's only going to bring in, $500 or $600 a month. But the way these properties work, the way they're valued is 100% based on the income that they produce or the profit that they produced. It's called NOI, net operating income. And there's going to be basically zero expenses to run this food truck. So all of that money is going to go right to the bottom line. Okay. And it's not a straight formula, but you can basically take the NOI and multiply it, the annual NOI rather, and multiply it by 20. And so we're going to this $500 a month, that comes out to $6,000 a year. That's $180,000 in value. Yeah, $180,000 in value just by putting this food truck space in there that we're adding to this property. And again, you guys, none of that's in the underwriting. That's all bonus. Okay. And then converting it to triple net leases as well, that's going to lower our costs because the tenants will be paying those costs. So lots of great opportunities here in the strategy. I usually get a few questions pop in here, so I'll put another reminder in. If you have any questions about the strategy or what we're going to do, go ahead and drop that in the questions and answer section, and I'll get to that towards the end. So let's talk a little bit about the capital structure. Like, where's all the money coming from for this deal? So I already told you guys earlier, it's a $2 million purchase price. We are getting a 70% loan to value loan. And so that means we have to raise 30% of that purchase price. And the difference for the remainder is the CapEx dollars, right? That we have to put in to do the renovations and the parking lot and all that kind of stuff. So that's why you have to raise a little bit more. The loan it's a 10-year fixed rate loan with a one-time reset at year 5, right? So it's not a floating rate loan. I don't do those. I'm not a big fan. It is fixed, but after the 60th month, between 60 and 61, whatever the interest rates are at that time, it'll reset one time. Okay. And then we have another 10 years. The reason I'm not worried about that one-time reset is, like I said at the beginning of this, it's a 5-year business plan. And so even if the interest rates go way up, we're going to already be on our way out of this deal. The other thing to know is it is a recourse loan, which I can talk to you more about that. But long story short, my partner Chris Carney and I both had to sign on this loan, and we're ultimately responsible to make sure that this gets paid. So, we have a lot of incentive to make sure that this is successful. Not only do we have $100,000 of our own money that we're putting into this project, but everything else is on the line about it too, right? So we've got to make sure that this succeeds. All right, so let's talk a little bit more about the returns, break this down a little bit. So I already explained to you that it's a 20% IRR, or internal rate of return. That equates to 2.29 times your money over the course of 5 years. How we're going to achieve that exit, right? So we're going to sell this off either to a REIT or a yield buyer, somebody that wants this long-term down the fairway type of investment. We also have plan B, plan C, and plan D in our back pocket, just in case something happens as we get to this 5-year time frame and that plan doesn't work out. We always have multiple exit strategies. Over on the right, you can see the actual cash flows based on a $100,000 investment. The minimum is only 50, but the 100,000 I like round numbers, right? So in year one, we're projecting a 5% profit back to you, the investor. So a $100,000 investment would get $5,244. Now that's a projection. It's not going to be exact. Keep that in mind. It could be a little bit more, could be a little bit less. And we pay out quarterly. And so my projection is there would not be a distribution in the first quarter. So the first distribution would either come in April. No, I'm sorry. Would not be a distribution in April because that would be for the first quarter. So for the second quarter, we would do those distributions in July. And that's when I project that they will start is in July. So um, then you can see in year two, that bumps up to almost 8% or $7,900. In year three, it bumps up to 8.5%. Year four is 9%, and year five is almost 10% on the cash flow. And then that's when we're projecting to sell the property. And then that same $100,000 investor would get an $87,000 profit on the sale and their $100,000 back. And so you add all that back together, and that's where it comes out to this 2.29 times your money over the course of 5 years. Now, again, I'm all about disclaimers. You guys have got to understand that this is not a fixed rate. It is flexible, and we may sell a little bit early. So we may sell in 3 years, 4 years, may even take up to 6 years. But the plan is 5 years, and we're pretty confident that we're going to blow these numbers out of the water. As I talked about, this is all based on 65 cents a square foot. And we have two leases at 85 and two at $1 that are being negotiated right now. They're just talking about the terms as we speak. And then the other incomes like the food truck and the advertising, none of that's in here. Those would all be bonus, if they come to fruition, which they will, right? All right, so why now? Or why this property, rather? So we already talked about the sub-market, right? The mountain home, one of the best places to invest in all of Idaho. Uh, I I I want to do 3 or 4 more projects there in the next couple of years if I can make them work. We have very conservative debt. The debt to leverage ratio is very conservative at that 70%. There's lots and lots of upside in this deal, tons and tons of upside. And then, as I mentioned, there's co-GP investment. We're putting our own money in, and we also are signing on the full recourse loan, guaranteeing that ourselves. And there's a very simple plan. You know what I forgot? I just realized when I said that part. My business partner, Chris, that I mentioned, is at the property right now doing a project. He's going to be the property manager on this property as well. So he owns a great property management company called ROI AM and PM. And I don't know the exact numbers, but he manages several hundred multifamily and residential properties across southern Idaho and other strip malls just like this. So Chris is an absolutely amazing partner, and he will be able to execute this business plan that we talked about. I mean, basically with his eyes closed. So he's done this exact type of thing before, and it's rinse and repeat. And we've also got some really great partners helping us with the leasing as well. And so we'll definitely be able to maximize this business plan without an issue. So I saw another question pop in. Yeah, we'll do that one at the end as well. So if you have any questions come up, please put them in the Q&A section, and we will cover those at the end. All right, so let's sum all this up for you. Okay, so again, an investment summary for Pioneer Crossroads. Oh, here's that sign I was just telling you about. For those of you that came on a little bit later, this is the sign we're going to replace with a digital reader board. So it's a total equity raise of $885,000, and almost $500,000 of that has already been committed. So we've got about $400,000 left. It's a 5-year hold, 20% projected IRR, and 2.29 times your money over the course of 3 years. Or I'm sorry, 5 years. Excuse me, 5 years. So with that, I'm going to take a drink, and then we'll dive into questions. So throw your questions in the Q&A, and we'll cover them all. All right. First question, who is the lender? Oh, I don't think I've ever had anybody ask me that question on a investment webinar before. So we're using Frontier Credit Union, formerly known as East Idaho Credit Union. Fantastic business partners. I'm glad to have Jeremy on our team. They've helped us really tweak this project, and this is our hmm, fourth loan, fifth loan with them. Great community partners to have on the team. Why two appraisals? So you remember why I said when I said that we bought it out of probate? So the probate judge required an appraisal for that process to go through, and our bank wouldn't accept that appraisal. So two completely different appraisals done, what was it, 3 or 4 months apart from each other, very close in value. One was 2.7 million, one was 2.8 million. What are the cash flow projections? I think we covered that in pretty good detail, but I'm going to go back a couple slides and I'll show you in more detail again. So the cash flow projections are right here. This is based on $100,000 investment. So you can do the math. If you invest 50, that's basically half of this. Obviously, if you invest 200, it's double that, right? So again, 5% in year one, almost 8% in year two, 8% in year three, 9% in year four, and almost 10% in year five. And again, these are just projections. They'll flex up and down a little bit, but as I mentioned, I personally expect to blow them out of the water. Next question. Current occupancy. How many are occupied now? How many are vacant? And what's the plan to get it occupied? All right, so great question about the occupancy. So it's about 50% occupied right now today. So cut that in half. So let's just say there's 6 full, 7 available. I'm not sure on that. I have to double check the number. Chris is here. We can get that from him if we need to. But they're about half occupied today, and we have 4 leases that we're in negotiation with right now. Right. And so we're working on those things right now to get like the tenant improvements negotiated and exactly what they need done to the property and those kinds of things. And so, if we get, let's just say 3 of those go through, that would put us at 9. And those should all close before, I'm sorry, those should all be signed before we close on this property. So when we get taken over, we'll be somewhere around 75% occupied. It's going to leave us with about 4 units to fill. We've actually, so first of all, Chris is a great property manager, has a lot of really great leads to help us fill these units up. He's been collecting all these names and numbers for the last several months as he's managed this property while it was in probate and he couldn't do new leases. And we actually hired a firm that specializes in leasing these kind of commercial properties. They can not only field the inquiries and do the negotiations for us with local companies, but they actually have the ability and the reach to go out and work with national companies and go after like franchises and things like that. And so we do have to pay them a little bit of money to do that, but they're the ones that are getting these leases at such higher dollar amounts that we talked about. So remember, I said we underwrote this at 65 cents a square foot, and we're seeing leases at 85 cents, maybe even $1. And so there's a lot of really good upside on that. I'm not worried about the leasing between Chris and our friends over at NAI. They'll be able to get those filled up really, really fast. I have the specific numbers for you. 6 units are currently filled, 7 vacant. There's 2 LOIs. So those are people wanting to lease. Both signing this week, right? So they'll be signed this week. And 2 are in the wings they're negotiating with. So as I mentioned, there's 4. 2 of them will be signed this week. Another 2 are still in negotiation. So great question on that. All right. Drop your questions in if you have any more questions. Let me go back to my list here. Right. What does recourse loan mean? Good question. So there's two kinds of loans. So there's what's they call a non-recourse loan and a recourse loan. A non-recourse loan uh, simply means that if something goes wrong and you can't pay the bill on the property on the mortgage, they can come and take the property back, and that's the end of the conversation. Okay, so a non-recourse loan means they take the property, the bank takes the property back if you don't pay the bill. A recourse loan, what that means is, so as I mentioned, my partner Chris and I both had to sign on this recourse loan. If for some reason we can't pay the bill, if there's not enough money coming in to pay the bill from the property, Chris and I have to pay the bill. That's what it means, right? So recourse means that they can come after us directly uh, to talk about to get the mortgage paid. So great question about recourse versus non-recourse. Again, nobody asked me that question, so I really appreciate that question. It's a good one. Um, I also just got a reminder, you guys. I told you Chris Carney's on this call with us, our property manager, and he just reminded me to talk to you guys about the food truck. I know I mentioned that in the very beginning, but that food truck space, that's not in our underwriting really either, and so that's a 14th unit that'll be on top of that. That we'll be able to fill food trucks into that space, no problem. They're very, very, very popular in Idaho right now, and they're beating us down, beating down the door. That's where was the phrase I was looking for to get that space filled. So we'll be able to fill them all without any issues at all. So let's see. Let me look at my list of questions here, see if there's anything I missed. We covered the lender, we covered the appraisals, we covered the cash flow, we covered recourse, we covered occupancy. Let's see. Anybody have any other questions that we need to cover? All right, you guys. Well, I'm pretty good at filling space here, so let me fill space for a minute while somebody types in a question. I see one typing out here. So, you guys, thank you so much for popping on here and getting these questions answered and learning more about this property and this investment. Right here on the last slide for you, if you're interested in investing in this, you can scan this QR code. It's going to take you directly to the landing page where you can put in a soft commitment, of how much you're interested in investing. This is also where you're going to see the legal documents that we mentioned, the PPM, you can see a copy of this slideshow. You can see more about the underwriting, the financials. All of this is on this landing page. So go ahead and scan this. It'll take you directly to our investor portal. And if you have any other questions after that, my email address is here on this slide. You can also call me on this phone number. And my website is there as well. So again, thank you guys for jumping on this call that we have for Pioneer Crossroads. I'm really excited to work with all of you on this investment, and I look forward to hearing from you soon. We'll talk soon, everybody.